So you want to get into trading or day trading and you don't know what to properly trade. You've got four instruments. You have crypto, you have stocks, you have the foreign exchange market, and you have futures. So what's the difference between all these and how do you know which one is right for you? In this video, I am going to break down exactly what the difference is between these four different items that you can trade and how you can tell which is going to be the best for you based off what time the market opens for each of them, what type of leverage you can use, what your country or state allows, and how it all works. So make sure you click subscribe and follow for this video, and we are going to take a deep dive into the difference between all of these. Here's the hard truth that nobody tells you. Choosing the wrong market to trade is actually the #1 reason why beginners either fail or blow their account, is because they choose the wrong market. Now think about that. You've got four options. So there's a 75% chance that you choose the wrong market based off your lifestyle and your budget. That's a big problem. Let's dive into why. Let's first start with the stocks and the stock market. So stocks are comprised of companies where you can buy positions into, you can buy a position or a percentage of the company that is traded on the public market. It is strictly controlled by the SEC, and it has trading hours from 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. There is typically no leverage trading when it comes to stocks. There are brokers that allow you to trade with leverage, but from a general zoomed out standpoint, when you buy fractional shares or a share of stock, you're buying it at face value. For instance, if you were to buy SpaceX right now, and let's say it was at $180 or $170, that's how much you're going to pay per share. So if you're looking to day trade stocks, what's going to happen is you're going to need to buy multiple shares, because one share moving at $4 to $5, if it even moves that much in one day, is not going to yield you that much money. So you need a lot of capital. Now, the opposite side is you could trade penny stocks or stocks that are smaller and hope that they have big movements. A lot of stock traders will get on pre-market, which is before 9:30 a.m., and put orders in on stocks that look like they are going to move toward the upside at market open at 9:30 a.m. Stock trading is typically more of a long-term investment. However, people do day trade stocks with large sums of money. Again, typically not much leverage in this. The pros of trading in the stock market is it's incredibly stable compared to other markets. However, the cons kind of outweigh the pros in my opinion, because the standard trading day is a little bit shorter, and in order to earn double-digit earnings, triple-digit earnings, 5-6-figure earnings, you need to start with a lot of capital. Next up is the foreign exchange market, or for short, it is called Forex. This is the biggest, most liquid market in the world. Again, biggest market in the world, with over $7 trillion moved per day in the foreign exchange market. Now, there are a couple cons and a couple pros to this. Pros, you can trade this 23 hours out of the day. It just closes from market switchover from 5 to 6 p.m. Eastern Standard Time. On top of that, you can trade Sunday night Asian session open all the way through Friday night New York session close. So you do have a wider time frame to trade, and you can trade with leverage. There's brokers that allow you to go all the way up to 1 to 2,000 leverage. I personally trade 1 to 500, but there are a lot of different components to the foreign exchange market where you're not trading a stock. You're trading the strength of a nation's currency versus the strength of another nation's currency. It's also been around the longest. The key thing to watch out for in the foreign exchange markets is that you can over leverage yourself quickly. So if you have a $10,000 account, you're trading at 1 to 2,000 leverage, 1 to 1,000 leverage, 1 to 500 leverage. You're opening up larger contracts than what your current money allows you to by the broker enabling you to leverage your money. With that said, you can also lose money just as fast. So having a risk management plan is so vital when you're trading in the foreign exchange market. Now let's talk about futures. Futures are a bit different because you aren't buying an actual asset. Instead, you're trading standardized contracts to buy or sell something like oil, gold, Bitcoin, the S&P 500 index at a specific price on a specific date. Originally created for farmers to lock in prices for their crops, like Forex, they offer great leverage and you can trade nearly 24 hours a day during the week. But unlike Forex, which is decentralized and scattered across global banks, it's regulated. The catch? Future contracts have expirations. The minimum capital needed to trade futures is usually much higher than stocks or crypto, and it's typically a professional grade market. Now, it's not to say that you can't trade futures, because as you know, on this app, everybody's trading NQ, ES, all these mini futures and taking positions to be able to use leverage and trade with. So it's not that you can't trade these, it's that they move differently than the foreign exchange market, and they certainly move different than a stock that has a board of directors and a CEO and a business that puts out a product or service and other people can buy into in a public forum such as the New York Stock Exchange. So let's recap what you're actually trading and what you are allowed to trade in terms of time on each market for each currency and for each market. So what stocks, you're trading shares of a company, and it's very strict daytime hours during the New York Stock Exchange, right? Forex, continuous 24/5. You can trade it pretty long. You can trade it pretty much all day and 5 days a week, actually really 6, because you can trade it Sunday through Friday afternoon. Moving on, you have futures. So asset contract prices. Asset contract prices, you can trade that 24/5, same as you can trade the foreign exchange market, moderate to high risk. Moving on to crypto, you are trading digital assets, digital tokens that do have a US dollar value assigned to them when you sell them within the brokerage or the blockchain. However, it's extremely high volatility and you can trade it 24/7. So with those things in mind and keeping all of that in front of you while you're deciding to trade, ask me this: what will you decide to trade and what works best for your lifestyle? If you want steady, high regulated environment where you can build a foundation during normal business hours, I would say start with stocks. But if you have a day job and need a highly liquidated market to trade, the early mornings and then the late afternoons or evenings, Forex and futures is going to be your honeypot there. That's just the way to go. It allows for a little bit more flexibility. Now, if you can only trade on the weekends, crypto may be for you because of the flexibility to trade anytime. It's the only market that's really open on the weekends, other than Sunday night, which is when Asian session opens for Forex, but that's because it's the next day in another country. Drop a comment below letting me know which one that you trade and which one you want to learn how to trade. And I will send you my free ebook on how to day trade. Make sure you like and subscribe to this video, as I will put out many more videos on educational resources for you to become successful in the markets, and that will help you learn to become a better day trader. Make sure you follow Matt Hampson FX and Trading with Matt.